brewing today. Fintech firm CRED has forayed into secured credit offerings with CRED Cash Plus, allowing its users to borrow against mutual funds in partnership with financial institutions with interest rates starting at 8.99%. CRED recently launched a suite of credit management tools aimed at helping its members improve credit scores, manage multiple cards and access secured credit without liquidating investments. My colleague Ritu Singh caught up with CRED's founder Kunal Shah on the sidelines of that launch event. For more, take a look.
Kunal, thank you very much again for speaking to CNBC-TV18. Finally, you've forayed into secured loans. This is something you spoke about the last time we had a conversation. Tell me what prompted the move and what prompted it now?
Yeah, I think it was something that was always there in our roadmap, but we wanted to create a user experience that feels magical, right? So let's just understand the product first of all. CRED Cash Plus is basically allowing our members to borrow against their mutual funds in the most frictionless manner without any documents and without having to deal with a human call or any of that stuff, almost in minutes, and get very attractive interest rate, almost 8.99%. And the idea is that it's something that we thought it was always an ultra HNI product where you always saw that this big businessmen kind of borrowed against their mutual fund or their stocks and enjoyed the low interest rates. But we saw very peculiar behavior where members were kind of breaking their mutual funds or FDs to kind of, let's say, have a temporary vacation or, let's say, get a wedding in the family addressed. It doesn't make sense from a compounding perspective, right?
Sure.
Mutual funds work when you keep compounding them versus break them for, let's say, doing a temporary transaction. You've lost that momentum completely, right? But let's say you may need money only for 2 years, right? Or 1 year or 6 months. I think this product works well for them. We believe that it was a use case only for business folks before, but I think it makes sense for every consumer now. And
yeah.
The same consumer now, instead of getting 15-16% interest rate on personal loans, could get a very attractive rate over here. There's no foreclosure, and with secured credit score goes up, right? Which actually works really well for the members. And our model has been very clear: always encourage good financial behavior, always make the interest rates work for you and never against you.
You know, while I understand the philosophy behind this, you want to provide a seamless experience to customers. Interestingly, this is also coming at a time when the unsecured segment is slowing down. I know you've said before, the segment you cater to is not impacted, but the fact of the matter is banks and NBFCs you partner with to give these loans are slowing down on the segment. So did that play a role?
I think it just coincidentally got timed around the same thing. We've been building this product for quite a long time. Most products at CRED are usually cooked and baked for many, many months, probably quarters before we actually launch it.
Well, this started in November 2023, if you ask.
Well, we started building much before that, so it's been a while before we started launching it. The reason it works out well in terms of timing, because you're right, the partners are quite ready to kind of do secured, but to get that experience working well for you to work across your demat accounts, all your mutual fund portfolios, valued correctly, given to you in a seamless manner, limits given to you in the most positive interest, like positively good interest rates for you, I think just doing that integration is a little bit of an effort because none of them have built these frictionless experiences before, right? And our goal was that if the ecosystem is demanding that and the consumer behavior is already shifting to that direction, be the one who's kind of being at the forefront of that. Yeah. Also, our consumer segment actually has quite a few, most of them have a large amount of AUM on their mutual funds as well, right? And we noticed that less than 1% of AUM was leveraged, right? If you go to more matured markets, it's very easy to imagine 20-30% of mutual funds being leveraged, right? And why should this not be the case over here? It works out really well from credit score perspective. It works out well for banks, balance between unsecured and secured. So the idea is to just kind of keep building on that momentum. But more importantly, is this the right thing for our members? The answer is absolutely yes, and therefore build it.
Will there be some kind of FLDG involved with your partners, or how would you be offering these loans?
When you think about secured, first of all, we do not participate in FLDG in most of the businesses we do. The reason is that we focus on high affluent customers, low interest rates. So FLDG is not a business that you will see in low interest rate businesses, right? Secured, on the other hand, actually does not have risk, because it's secured business, right? Yeah. So FLDG is not a very prominent thing or pronounced thing you'll see in any secured businesses anywhere in the world. So what happens is that we actually facilitate for the banks and NBFCs to make it easy for offering these things on our platform. We make our small fees on top of that for facilitating this thing or as a cross-sell ability on our platform. But there will be no FLDG in this particular category because of the nature of the product it is.
I know you don't really focus on revenues and certainly not profits, but with these additional product lines, could you give us a sense when you're offering 8% kind of starting interest rates, what kind of additional revenue do you hope this will unlock? And will we see more unsecured or rather secured products from you in future?
First of all, I think it's not true that we are not focused on revenue and profit, but I think we are more long-term about our business versus trying to make that quarter win, right? We're trying to build a business that will outlast every single member that exists at CRED, and therefore the choices we make are much more long-term in nature, right? If something is right for the consumer and makes you less money, but eventually you will be able to enjoy the trust of them for 2, 3, 4 decades, the amount of money we'll make will be actually much more than anybody else over there, right? So always focus on being long-term, always focus on long-term revenues, long-term partnership goals with our lenders as well. All of our partners, we would be probably the largest partner for all of them because largely we focus on how the long-term partnership works, right? And if we are it's unsexy to build boring long-term businesses, but I think when it comes to financial services, that's the only way one should be building businesses.
Okay, with a long-term view, not really focused on short-term profits yet, but quickly a word on your loan book, which has crossed about 19,000 crores as of December. How fast is it growing, and what do you hope will be the contribution from the secured segment as you expand in this space?
Just a quick clarification, it's not our loan book, it's a loan book that
through your, yes, you do not lend from your platform, you do it with a distribution model.
Exactly. Yes. I think the growth rate is quite healthy. It's kind of keeping up to the market growth rates only. At least when it comes to prime customer, the growth rate is not slowed down as much as for the other segments. The growth rate is slowed down for high interest rate loans, short-term loans, and low credit score loans. When it comes to, you see the lenders are actually switching more towards more prime and super prime customers, right? Because they have demonstrated to be having much more resilience in these times, right? So we are actually seeing a decent amount of growth. Hopefully we'll announce numbers in the next financial results, but we are quite confident to continue the momentum. But we have been very proactive in ensuring that our promise to our lending partners is the best quality book out there, right? I think what we are able to prove in this time is that we are actually the best partnership that we can imagine, because even in these turbulent times, we've kind of been the absolute pristine book that they want to go after.
Well, some of the other products you announced today, for instance, customers being able to see their CIBIL scores on the app. What kind of monetization opportunities do you see from there?
Yeah, I think CIBIL score or building card management, these products are not necessarily designed from revenue backwards, but creating a good, responsible credit behavior. We want to create an ecosystem where A, we attract people who like being responsible with credit, B, attract the partners who like to lend to people who have these needs of solving for that, and every product that appeals to the people who are wanting to do responsible credit behavior is what we are building, right? So it's a self-selection of those customers, right? For example, people who are trying to take high interest rates, do misbehavior with the thing, may not appeal to this. Like, we are this over-alerting, over-protecting platform where we say, boss, protect your long-term reputation. So it's a self-selection, right? We want to aggregate the best quality customers that eventually everybody will care about.
On that